Since quarter end, the repo program has been expanded in scale, scope, and it really starting to resemble outright money printing.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And as the Federal Reserve insanity continues on with repos and a whole lot of other stuff that sounds like quantitative easing, but apparently is not quantitative easing. Fortunately, we have Dave Kranzler, my vote for the new Fed chairman, back on the show to break down what's going on. Dave, we heard a couple weeks ago, or maybe a month or so ago, that the Fed was doing repos just quarter-end tax purposes, this or that. Turned out to not be so temporary. They've grown. New measures have been announced. So perhaps to get started, you can break down what the heck is actually going on.
Search me, you tell me. I thought it was a quarter-end corporate tax problem where corporations needed cash to pay their quarterly taxes and banks needed a little extra cash to balance their books. I mean, doesn't that seem like that's logical explanation? Even though since quarter end, the repo program has been expanded in scale, scope, and it really starting to resemble outright money printing.
Well, let me read a quote from Fed Chairman Jerome Powell just to clear that up, because he says, "In no sense is this QE, I want to emphasize that the growth of our balance sheet for reserve management purposes should in no way be confused with the large-scale asset purchase programs that we deployed after the financial crisis." So again, he says, in no sense is this QE. Sure seems like we're getting into semantics there. They're increasing the money supply and it's getting bigger by the day. So what say you to that, sir?
It's Orwellian semantics. Someone, this will never happen, but one of these reporters at these stupid pressers should ask him how he would define quantitative easing.
Yeah.
Because that's essentially what a repo program is, a repo operation. It's, the overnight repo is overnight quantitative easing, because it's essentially all. The reason why they call it quantitative easing is because the Fed prints money and it gives it to the banks, and in exchange it takes an asset against that money that it's given to the banks. So it's a treasury. In the United States, it's a treasury bond or a mortgage security. Outside of the United States, it's pretty much anything. I guess Japan is their central bank buys stocks. So that's what they want to differentiate between money printing and not money printing, is because they're taking assets in exchange for cash. Well, the problem is it's printed money until the money is removed from the system. It doesn't matter what the Fed has taken in against that. So, and we've seen they printed about a little over 4 trillion the last time around that we know of. Right. And they tried to remove it and they got it down to, I think, about 3.6 trillion, or maybe not even that low. And then they had to stop removing it. And then a day or two later, actually it was 2 weeks after they were supposed to stop removing it, they started adding it back. So the money that has been put in the system and not removed is printed money. Call it whatever you want. Balance sheet expansion. I had to laugh at the FOMC press conference. Powell referred to it as organic balance sheet expansion. What the hell's the difference between organic balance sheet expansion and balance sheet expansion? I mean, is what they're doing now genetically modified balance sheet expansion, because it's only term repos and not permanent open market operations, which it's eventually going to turn into?
Well, Dave, actually, I do have the answer for that, because further down this article, Jerome hinted at a speech, I believe last Tuesday. He said the Fed's funding plan would be designed to maintain a firm grip on very short-term lending rates and not to provide economic stimulus. So according to him, in no sense is this QE, because this isn't even intended to provide stimulus, but keep short-term market lending ongoing, which, all right, even if we take that at face value, then what seems hard for me to reconcile is then how does he come out at the last Fed meeting and the press conference and basically say, hey, the economy is great, things are in great shape, but we need to do this? I mean, I don't like calling people a liar or disingenuous, but it just,
If the shoe
we
fits.
saw what happens when the banking sector melts down in 2008, and that's nothing for people to be concerned about.
Well, first I want to back up for a second with regarding the statement that you read. I wonder if his speechwriter kind of chuckles as he's writing that, and he has firm grip and stimulus in the same paragraph. I mean, to me, that is emblematic of what a clown show the whole Fed operation is. So, I mean, that's basically a bunch of gobbledygook. I mean, this is where I miss Alan Greenspan. I mean, he was the money printing maestro, the original money printing maestro, and but his phraseology was phenomenal. He could read a whole page of whatever it is he was talking about that he wrote and not say anything, and yet people would be like just dazzled by it.
Yep.
You know, Powell is just, he's got zero linguistic abilities as far as I can tell, and no creativity or imagination. So but I mean, to me, again, I haven't heard a satisfactory explanation for why we have to do these operations. I mean, it's injecting liquidity into the banking system, and it wasn't because of quarter end liquidity squeeze, because now we're going well into the first and second quarter of 2020 with these programs, and they escalated very quickly. And I actually suggested that might happen when I wrote my original blog post, I don't know, in mid-September about this. And I said it's not what they're saying it is. You know, to me, you kind of have to follow the money. Well, in this case, you can't. It's hard to follow the money because we don't even know what banks are receiving the liquidity injections. So I've heard, oh, it's Deutsche Bank, oh, it's JP Morgan. Well, yeah, I'm sure they're in the mix, but it's all of the big banks. And then they quietly loosened up the Dodd-Frank restrictions and some of the other regulatory restrictions on foreign banks that have U.S. subsidiaries to make it easier for them to stay in compliance with regulatory controls, and also these foreign banks are also receiving repo money. So yeah, Deutsche Bank's an obvious candidate. HSBC is probably in there as well as a few others. SocGen is probably one of them. What I think is going on, and again, it's hard to prove, but I mean, you know, I'm just looking at the footprints in the snow to see where they lead me, and I think that banks have asset deterioration going on, meaning their loans and their bond assets that they hold on their balance sheet, especially the subprime ones and especially the leveraged loans, are starting to not perform. And at some point, when they reach a certain level of non-performance, the banks have to come up with cash to make up for the cash shortflow. So they get cash in from the people who took down these loans and bonds, et cetera. They get cash in, and then to the extent that they've securitized this paper and put them into bond and loan trusts, they pass that cash through as the servicing agent to the trust, so that the trust can make payments to the bond investors on the other side. Well, if the cash flowing into the banks slows down, the banks have to make up the cash flow shortfall to pass on to the trust. That's part of their obligation as when they retain the servicing rights to these trusts that they create and underwrite and dump these crappy bonds and leverage loans into these trusts. So I think that's part of what's going on.
Right.
I mean, WeWork alone probably exacted a toll on Goldman Sachs and JP Morgan, because JP Morgan has committed the most capital to WeWork, and Goldman Sachs is second, committed the second most amount of capital, and WeWork is essentially ready to go bankrupt. I think it looks like SoftBank might bail it out, and I'm sure that's what JP Morgan is lobbying very hard for them to do. But I mean, that alone has probably created some liquidity stress at those two banks. So I mean, based on all the research I do, okay, the subprime level of consumer debt, auto loans, credit cards, leave student loans out of it, but that's a big problem. Personal loans, etc. A lot of those loans taken on by consumers are especially the subprime segment of these loans are at delinquency and default rates that we haven't seen since 2008, 2009. So that means payments aren't being made on these loans, credit cards, autos, etc. And if you look at the total sum of consumer debt, I don't know, it's like 1.5 trillion now or something, whatever it is. No, it's probably more than that, because just auto loans alone are about 1.4 trillion. So it's, I don't know, 4 or 5 trillion, whatever the number. I haven't looked at it, but a certain percentage of that is subprime, and the amount that's subprime is an amount that exceeds the amount of subprime mortgage debt when we had the mid 2000s housing crisis and mortgage default crisis. So we're back to where we were back then. It's just a different flavor of debt, and at some point mortgages are going to start contributing to the delinquency and default party. So that's what's going on, in my opinion. You gotta, the asset side of these banks is starting to melt down, and it's starting to look like it looked in probably early 2008. So that's what I personally think is going on. And until someone can give me a better explanation, that's what I'm going with. And we know the Fed and the banks themselves will never tell us the truth.
Well, that is one thing you can count on from the banks.
That's 100% guaranteed, by the way.
Well, I mean, by the fact that it's happening, and here it is, Powell and Trump saying, hey, everything's good, don't, open your eyes and look, which I personally feel does a disservice to people. Again, another one of the quotes from, this was last Tuesday in that same article that I referenced before. Powell says, indeed, my colleagues and I will soon announce measures to add to the supply of reserves over time, which on some level is indicating they've been doing these repo transactions, yet on some level that's not enough. And sure enough, on Friday, Fed will soon increase its purchase of short-term Treasury markets, Treasury securities into the second quarter. So, like you said, they don't seem to be warning anyone, although, Dave, you did mention some of the speeches that the Fed writers come up with, and you talked a lot about 2008, so I thought I'd love to hear your comment. I'm sure you've read this before, Ben Bernanke's op-ed in the Washington Post right as he was launching QE2, which I've thought about for a decade, because he mentioned this approach eased financial conditions in the past and so far looks to be effective again. Stock prices rose, long-term interest rates fell when investors began to anticipate the most recent action. Easier financial conditions will promote economic growth. Lower mortgage rates will make housing more affordable. Lower corporate bond rates encourage investment. And higher stock prices will boost consumer wealth, increase confidence, and increased lending will lead to higher profits that, in a virtuous circle, we used to giggle about that one on the floor, will further support economic expansion. What he didn't mention there is what you might expect when you do the opposite of that, which we've seen over the last year when they try and tighten. So like you pointed out, it's the exact same thing. Here it is, it's been made bigger. And even a decade later, we're still not getting the straight story.
Well, why would you expect that to change? I mean, what you just read there from Bernanke, everything in there except the punctuation marks are a lie. and I'd have to proofread it to make sure it was punctuated properly. All right. Bernanke, I don't know if that guy would even know how to tell the truth if it was contingent on saving his life. He is a serial perennial liar. I mean, they all are. And that's why I loved Greenspan, because he at least did it elegantly and with style. I mean, you just read through that editorial or that op-ed opinion, and you can just slash and burn it. Forget everything that he said in there because it's all fictitious.
Yeah.
And things haven't changed. I mean, Powell is even less of a statesman than Bernanke was. I guess maybe because Powell used to lecture in front of classrooms all the time. You know, he became a little more articulate. But Powell is, I mean, he's a brute. He's a caveman when it comes to this.
Yeah. Well, speaking of which, we do have another Fed meeting coming up at the end of the month. Any thoughts of what to expect at that circus?
I don't set any expectations for these Fed meetings. I just like to look at what comes out on the other end. It goes in their mouth and it comes out the other end after the meeting's over. So, it's all just, it's kind of frightening how Orwellian the propaganda is. And, oh, well, we need to have a certain level of inflation. Well, I still have yet to see any rational economist explain to me why inflation is good. Inflation doesn't mean that the economy is growing. Inflation just means that everything is getting more expensive. It's essentially, I mean, it's the corollary to inflation is currency devaluation. So, essentially when they say, well, we need to create a certain amount of inflation, what they really mean is they need to create a certain amount of currency devaluation to give the illusion of growth.
Right. Well,
So, I like to think about it this way. When you look at like the retail sales number every month, and it's not inflation adjusted, it's a nominal number. So there's growth. It grows, right around, the stated inflation rate. And they point to that and say retail sales increase. Well, no, they didn't. The dollar value of retail sales increased. But if you think about it in terms of unit sales across everything that goes into retail sales, unit sales have declined. And that's why you get an increase, or the unit sales have been flat. So there's no real growth in there. You see what I'm saying?
Yep.
Well, and so essentially all the retail sales number every month means is that it takes more and more dollars to buy the same basket of goods that you bought the previous month.
Yep. Well, it's incredible how just the way the numbers are presented can skew a lot of the way people look at things. And perhaps the last question I have for you today, I'm sure you've heard the reports of Dr. Mark Skidmore, PhD economist at Michigan State University, that actually set out to disprove that he was hearing there were reports of large amounts of missing money. And he came back verifying that there's $21 trillion of undocumented adjustments between the Department of Defense and Housing and Urban Development. Went in asking questions, just saying, hey, I'm looking at these statements. I'm an accountant. I don't understand this. They removed the documents. So what stands out to me, though, is that if this money is missing, and I don't even know how you would account for that in the money supply, but if there's now an additional 21 trillion, and God knows what the real amount is, wouldn't that alone have to reprice the entire financial board? It's like you have the majority of the world looking at it, not even knowing that's there. But unless this can be disproved, which I have yet to hear anyone even attempt to do, doesn't it have to reprice everything when people finally really start to grasp just how ridiculous these things have become?
That $21 trillion thing, I mean, honestly, I don't really have an opinion either way on it. I mean, it probably is the case that there's 21 trillion that's missing, but where it ended up, or who knows? I don't know. I mean, there's just, again, it's one of those things that we probably won't ever get to the truth about until the system collapses and the history books are written. I honestly, I don't know. I know a lot of people think that a good portion of it ended up in the exchange stabilization fund.
Right.
But I don't know. To me, it's a horrifying thought to contemplate. I'm sure a lot of guys enrich them. If it is the case that this happened, I'm sure a lot of the insiders. I think it happened during the Bush era, right? Isn't that when it supposedly disappeared?
I guess
W's
Bush was
presence.
still in office. I mean, it was reported in the last year or two, but I guess goes back.
Well, it's been around longer than that. I mean,
I remember Donald
someone
Trump.
revived the rumors of it. So, when I first heard it, I was like, yeah, I'm sure Cheney and Rumsfeld and their gang enriched themselves with this, and there's probably some offshore bank accounts that are loaded to the gills with a lot of this money. But again, it's who knows? I don't know. So
Yeah.
it's really not. It's something that I kind of stay away from, believe it or not. Even though I love a good conspiracy theory as much as the next guy, but it's just something that I think that's even harder to prove than what's going on with the banks in this repo situation.
Well, in a sense, yes, although keep in mind that September 10th, 2001, Donald Rumsfeld, you can go look on YouTube and see that he talks about how the Pentagon had lost, I think it was $2.1 trillion, and how the real enemy is American bureaucracy, yet, never heard more about that. And to me, it just goes to point out that we really don't know how many dollars there are. We don't really know a lot about this financial system that we've been told to have complete confidence and trust in, and which again is why I think it's great that there are folks like you that are out there researching and writing about this. And perhaps just in wrapping up, you can let folks know about the journals that you write. So if they're wondering, again, we introduced a lot of topics today, but how do you actually take this information and use it for your investment purposes? And that's where you come in. So if you can let folks know how to find you.
Sure. First, though, to me, a much more interesting conspiracy theory, because it's actually a conspiracy fact, is tell me what happened to all the gold that was being stored beneath the World Trade Center when the World Trade Center went down. Now that's something we know one side of the equation for sure. The gold disappeared,
Right.
but no one's ever bothered to explain what happened to it. And it was a lot of gold. I think it was gold to essentially facilitate COMEX trading. So, but my website is investmentresearchdynamics.com, and I try to put up a blog post 3 or 4 times a week if I have time. And then there's links on there to my mining stock journal, which is a bi-weekly newsletter that covers gold and silver market issues and primarily junior mining stocks, although I have a couple undervalued large cap producers that I now follow that are in there. And then my short sellers journal, which is a weekly where I usually try to de-spin the weekly economic numbers and explain why, in my opinion, the economy is already in a somewhat nasty recession. And then I present ideas for shorting stocks, either outright or using options.
Yeah, and it's been helpful getting those journals. I know a lot of people appreciate what you do, and certainly not perhaps the easiest environment when people are there, president, Fed chairman that we're supposed to trust. Again, the goal of these calls isn't to sit there and pick on anyone, but to the degree that people, I think they're giving out bad information, and that's why I really appreciate you coming on here to share and at least give people honest information so they can decide what makes sense, how they want to respond, but not be investing from that standpoint where 10 years ago we heard subprime was contained. Turned out it wasn't the case. So people are tired of Washington, Wall Street, and all that. Investmentresearchdynamics.com is where you can find Dave Kranzler. And with that said, great catching up with you as always, my friend. And
Likewise, Chris.
should be exciting times ahead soon.
Yep, I agree.
Well, we'll stay in touch and keep everyone posted. And thanks again for joining me.
Thanks for having me.